Now, fixing local government is set to be next on the list of priority reforms for Operation Vulindlela. This as it seeks to boost South Africa's economic growth rate over the next 5 years. The performance of local government has emerged as a significant obstacle to investment due to its failure to deliver basic services or process regulatory approvals that investors rely on. Development economist Phelisa Nkomo and Rudi, who's head of project management in the Presidency, join us now to look into Operation Vulindlela's performance and priority areas in future. Good afternoon to you both, and thank you so much for your time.
Hi.
Thanks.
Good afternoon. Hello.
Wonderful. Rudi, maybe we'll start off with you here. I want us to maybe look back on the economic circumstances and reality that led to Operation Vulindlela really being a project that would come together, Presidency, National Treasury, and the President, I think, really at the helm of it, pushing these reforms through.
Yeah, I think that's quite an important and unique initiative. The center of government coming together, as you say, ministers being centrally involved. It's the president's program, and I think you captured it quite correctly. He's driving the structural reform program. More importantly, the ability for us to be able to say, we have a set of priorities, but what's important for inclusive growth, right? And basically saying the big focus is on the network sectors, energy, logistics, water, visas, and telecommunication. And I think that's been a phenomenal thing because prioritization is not always an easy thing to do, It depends on where you sit. Others may think education is going to be important, health. Not that these are not important aspects, but I think the ability for us to be able to have a laser focus on the specific sets of reforms have been important for us. And generally speaking, the economy can't grow. You can't have the kind of investment if you don't deal with two fundamental constraints. The energy constraint, of course, that we sit with, and we yet not yet out of the woods. And secondly, logistics. We're a big exporting country, and more than 50% of our revenue earned are largely from bulk commodities that we export. So critically, focusing on those two areas with the rest of it has been an important part for us to go forward.
Wonderful, Phelisa. I'd like to bring you in here, of course, on the back of understanding maybe the five key pillars that make up Operation Vulindlela: energy, water, logistics, visas, as well as telecoms. If we sit back and take a look at what we have seen come to fruition there, have we seen these really delivering the kind of stability, because I think we'll speak about growth in a bit, but stability that the economy so badly needs?
Well, thank you so much, and thank you so much, Rudi. I just want to make several points to foreground my argument here. Is that firstly, it's important for government, right, to play a role in reducing what we call a cost of doing business, right, in the economy. And then the second point is to really look at it and say, what are the binding constraints really that actually inhibits progress, and around particularly stimulating local economies, but also fundamentally making sure that you grow our GDP. And then the third issue is that we shouldn't apply one size fits all in all these interventions. I think it's going to be important that our scrutiny is actually applied per intervention. And then the fourth issue, of course, as a heterodox economist, I'm particularly quite nervous around the private sector participation, because we know that consistent, in fact, literature have shown, even empirical evidence, that once you have private sector participation in public goods, what it also does is that it pushes the cost of doing business, but also it undermines issues around equity in the country. And of course, you have to balance that with your development paradigm. But then the other fifth issue, which is quite important, is that when you are undertaking some of these reforms, there are confluence of issues you need to pay attention to, which is amongst those. If you're doing reforms, then you need to then look at what are the industrial structural reforms that you're undertaking to meet some of those. So Rudi makes the point, he says, logistics is very important in this country because we are an export-dependent, export-led growth economy. But the key question is actually how much of the output that is coming out of our shores to the overseas market. Our GDP growth was just 0.01% 3 or 4 weeks ago, right? Or just on the eve of elections. So fundamentally, and I mean, even the projection is sitting at 0.6%. We've been growing at less than 1%, or even, 2%. For us to truly experience a robust economic growth and inclusive economy fundamentally, is we actually need to make it sure that we grow above 3%. We've experienced increased unemployment. We have an unemployment crisis of 32.92%. In fact, that's a conservative definition. The expanded definition is actually sitting at 49.8% because a lot of people are actually absorbed by informal economy. So for me, the business related reforms, right, which do not take into account the secular form of economic intervention that are required, might yield minimal impact and results. And I'm saying this, by the way, on the back of saying that private sector participation is important, but then we must not use one size fits all approach. Last point, on energy perspective, I mean, we've seen increased, energy factor increased by 70% in the last 120 to 90 to 120 days, which has really been an improvement. But one of the key issues, what Rudi and the team must take South Africans into confidence is, what is it that they've done to improve? Because one of the key things we're going to start paying attention to is the financial statement of Eskom, because we want to see the cost of IPPs, because last year, in the last 2 financial years, it's been sitting at 28 billion. We want to see the cost of diesel. We want to see exactly what type of reforms at a plant level that have been undertaken. Because also you don't want reforms to support the economy that in fact create the very leakage and are quite extractive to the economy. Because remember, when I'm saying extractive economy, this context is that Eskom is a state-owned enterprise. So when Eskom sneezes, I get affected as an ordinary citizen of South Africa. So the 64 million South Africans I actually get affected. And I do think that, so the microeconomic reforms are important, but their impact and the qualitative impact depends on other multiplier effects and other aspects of industrial development being activated, even at a local government level, by the way. You can actually pursue the EIAs, the zoning issues, which are a massive issue, the issues around water, but what quality of leadership that exists within a local government? The sources of revenue for local government, right? It's energy and water and property tax. And we know that when the economy is not growing, right, the biggest fears of a government that gets badly affected, it's local government, because local government depends between the three of us of what type of income do we have, and whether if there's an increase in unemployment. And then people are going to start going into the indigency register, because they're not going to be able to fulfill their debt obligation in relation to municipalities. Okay. So, and I think the point I'm making, I think if you follow my thought process, again, I'm saying confluence of issues, don't apply one size fits all, but at the same time, it's also important that we start seeing that qualitative impact of these reforms.
All right, thank you for that, Phelisa. We don't want to bring you in here, maybe responding to some of the points that Phelisa has made, but also really keen to get your thoughts on private sector participation. There are certainly schools of thought that think this is a good idea. The private sector playing a role that is a little bit more than just benefiting from an enabling environment, which has been a narrative that has carried on for a very long time. But also then the whole issue of the fact that, private participation in public goods, that can also lead to some complexities. Just keen to get your thoughts on some of those.
Not if you design it properly. And I think here the point that Phelisa makes is quite spot on. You don't want to replace one monopoly with another monopoly, right? It doesn't lead to efficiency. This is the thing, right? And so let me come back to that. But I thought it's important, the point that Phelisa makes. The structural reform program is not government's economic policy. I think that's quite clear, right? It's about creating an inclusive growth society, but it's dealing with inhibitors to growth. The structural reform program should be seen as a package of whole broader set of interventions that are there, industrial policy interventions, issues around competition, for instance, various incentive programs that are there, some of the other demand side interventions that's there. What we've come to realize is that the structural constraints to economic growth is one aspect, and this is in our control. So when we talk about, let's talk about telecommunications and talk about the fact that we would want to auction frequencies. And what we've done, for example, is auction of the spectrum. It's in our control. When we talk about the fact that on the freight logistics roadmap, freight logistics rail, there's a monopoly of Transnet. We have no efficiency. We have significant decline in the volumes. Energy, for example. Similarly, we've decided on in 1998 on its white paper on the kind of energy reforms that are required within the energy sector, right? Eskom being at the middle of that. 2019, we adopted a cabinet roadmap, for example, on energy to create a competitive market space in the generation. Now, I think it's quite important for us to understand this is one aspect, albeit quite important, that is critical as part of a broader economic package. It's not the economic policy of government, I think, and it's important for us to clarify that. So it's critical. We have, for example, looked at the interventions on those 5 particular areas, and we looked at it from a point of view of what would increase growth. Now, of course, we agree with Phelisa. Inclusive growth is quite important. But at this point in time, we have little growth, right? So you need to think about the fact that the target that you set is when you see growth above 3%, is when you begin to see that multipliers playing. 3% growth and more allows for the economy to absorb every single person that enters into the labor market every single year. There's an excess of 600,000 people that enter there. 3% growth allows for investment decisions to take place, where we're currently sitting somewhere between 15% of GDP, both public and private, for that to take place. 3% growth requires for us to be able to see some decline beyond just the new entrants, but others. So it's quite critical for us to be able to have that kind of growth conversation, but ensure that we don't add on a whole set of other dynamics. I think it's going to be quite critical for us. What we need to see is high levels of growth, and growth has to be inclusive. What drives employment, what's going to drive inclusivity is that high levels of investment, and that's going to be important. Now, I want to come to the point around private sector participation, because in the network sector, what we do have is high levels of inefficiency. We have state monopolies, and let's look at rail, for example. So rail is a state monopoly, freight rail that is, and of course, one of the challenges that we've seen right now is that we want to introduce private sector participation. It's not about concessioning to one operator or selling it off in a privatized form. This is creating competition that allows TOCs, train operating companies, private operating companies, to access those particular sets of corridors and participation. Now, that's important. That's a different design. It's called third-party access. So you may say, I want to sell off slots on, for example, the general freight NAPCO line, right? And I want to sell off X number of slots. You have train operating companies putting in bids, saying that, this is the slots that we would have. And this is quite important because we have to create competition in the sector. Competition, generally speaking, drives efficiencies and not replacing one monopoly with another, but it also brings down the cost of goods. Right now, we do have a logistics sector that is highly inefficient, highly cost ineffective, and does require for us to be much more efficient and much more competitive so that we are able to compete much better, both locally and internationally. And I think this is going to be an important conversation going forward. Similarly, let me use energy. We have for 100 years a single vertically integrated with a single off-taker, Eskom, right? Eskom produces, Eskom transmits, and Eskom distributes. In the reform that we've done, for example, again, this is part of the energy white paper and part of the cabinet decision on the roadmap. Firstly, to set up a national transmission company of South Africa. We've done that. On the 1st of July, the National Transmission Company of South Africa becomes an official trading entity. We've set up a board. It's quite important to understand what that reform means, because there are other generators other than Eskom that is able to compete in the market space. And we've seen that. So for instance, when we did changes to Schedule 2 around the cap for registration. We remove the cap entirely. Today, as part of OVI, we track 131 projects. That was not there 3 years ago. Investing in 23,000 megawatts of new generation capacity. That was not there 3 years ago. Estimated at just under 400 billion worth of investment. That was not there 3 years ago. So I think it's quite important for us to be able to take into consideration the importance of introducing competition and efficiency. I say that quite, I hear Phelisa's point, and I think it's quite important. You can't have an old model, an orthodox model of how you see private sector participation, where you hand over one part of Eskom generation to a private operator, and you think that's competition and efficiency. That's just one monopoly replacing another. The design of how we see private sector participation is quite important. And I think the way we've gone about it, for example, in both energy and now in rail with open access, I think is the kind of model that's there, and it's going to be important for us to introduce private sector participation going forward.
Guys, we're actually out of time. I didn't expect that to be our reality. Phelisa, I'm not sure if I think we've got a minute left. If you'd like to respond to that, you certainly can. But of course, time is of the essence.
3 things I want to say. It's important for government to make sure that it reduces transactional cost of doing business in the economy. And then the second issue, though, is that while government may want to break monopolies, right, they need as well to activate other aspects of the economy. You see, the fact that once our economic architecture is actually polarized, work in parallel, you are always going to struggle to measure the qualitative outcome of your investment, right? So one of the key issues, for instance, and I like the point around energy that you're making, around the substantial investment of experience. But then let's talk about how that has contributed into the industrial capabilities of this country, how that has actually created employment. It's actually been so, because what we've done is that we've become an assembling economy. So if you actually introducing reforms, you need to pair the reforms with localization. And that localization must also be supported by not only by 2 things, by also financial support, but also fundamentally, a shift from a risk-averse approach. Currently, we spend less than 10% on DTI, on industrial development. There are reforms that are being pursued. We're seeing so many, IPPs that are being established in South Africa, but the technological infiltration is minimal, right? Because I do think that for me is that when government is actually easing off on transactional costs and introducing reforms, then it needs to activate other aspects. And if it doesn't, right, we'll continue to become an assembly committee. The last point I want to make is South Africa has its actually industrial capacity is sitting at 19%, which was 49% when we took over this country. And in simple terms, it means that 81% of everything we consume in this country is coming from outside. And I think we must think about, when we push for reforms, what are the policy? In fact, you must always ask the question is, what are the implications to the economy of this decision that we're making?
Wonderful. Rudi, Phelisa, next time I'll book us an hour and we'll make sure that we address this. Thank you so much for engaging so robustly some of these issues and really giving us quite a bit to think about where inclusive development and growth are concerned in South Africa. That was Developed Economist Phelisa Nkomo and Rudi, head of the Project Management Office in the Presidency.